Hey everyone, I hope you're all doing great and having a fantastic weekend with your loved ones. Today is Saturday, and as always, on Saturdays, I'm recording for you a breakdown video. This is about one of our cleanest trades happened on 28th of October on gold, which took us, I believe, 45-50 minutes to hold this trade, and we made around $10,500 on this single move. I love this trade. I'm very proud of it, and everything has been shared in the private channel. As you can see here, the moment of entry here, risk to reward is 1 to 2.3. With 1% risk, we could have made 2%, 2.3% of this trade. I believe I made, it's like $10,526 on this trade in 45 minutes, roughly 45. It might be 50 even. So even if it's 50, even if it's 1 hour, it's great profit in that short time. Many of you also messaged me about this trade, and I'm very happy and proud of you guys that you managed to take that trade. Right, this is beautiful. So what I'm gonna do here now, I'm gonna go back in time. This is, by the way, replay mode. We can use it on TradingView. You can simulate the old data, backtest, or analyze market. The price action that already happened, right? So I'm going to go back in time, simulate the live environment for you, and break down step by step why did I take this trade, what was the reasoning, what was my thought process, etc., right? So in order to let's remove everything. Let's remove this. Let's see if we can cash the exact same trade once again. First of all, before we do anything, before we enter a trade, we don't do it randomly. We should have some confirmations, right? Starting from higher time frame, as we always do. Clean up everything here. Clean. As we always do, we start from higher time frame. If you ask why, we must follow the trend. We must follow the big money. We should know the direction of higher time frame in order to have some edge on lower time frame. My idea on this trade was gold was dropping extremely, like this is wild. Like if I do a measurement from highest high to lowest low, it's like almost $500 move. This kind of, I wouldn't say the correction, but this kind of drop never happened on gold, like in the history of gold. $500 of drop, never seen that. Here is 319, as you can see. If I go even like 254, never happened. I've never seen this. Maybe you have seen this, but I'm not talking about this move, like here, from huge range. On a single day, gold moved to like $300. This is crazy. Like this day, like look at this, $376 move. Never seen that. This is historical moment. And I had two zones on gold on daily time frame, from which gold could have gotten some reaction from, right? That first one was here. We had some reaction, no continuation, right? This got invalidated here with these two bearish candles, and I only had this demand zone left for a test. And as soon as it got tested, it doesn't mean that I'm placing my limit order hoping that it will turn. No, this is not how trading works. First, we have a zone, potential area from which market can get some reaction, meet some buyers. After seeing the reaction, which is positive, we can go lower time frame. Before that, there's no reason to go lower time frame. We got some reaction, positive, nice rejection. Okay, now we can go lower time frame and look for some kind of positive reaction. And what I consider as a positive reaction is a creation of a demand zone. As soon as this candle closes, this will be sufficient for me to call it as a demand zone, newly created demand zone. It means that at this price, buyers are interested in buying gold. Very simple. There is a demand in this price on gold at that price, sorry. So as soon as we have, see, okay, that's a full engulf with a huge bullish candle, which makes this area a demand zone. Meaning, if price comes back to that zone, there will be a demand, there will be a support. So you can easily enter like this, but just stop loss below this low because there's a demand. People are interested in buying in that zone, right? So your stop loss is protected, right? But that's not how we entered. We went lower time frame after demand zone got created, and we start to watch market closely, right? I think the microphone got shut down. No, it's working. All right. And now we must understand the cycles of Wyckoff. What is happening here? As I see, this can be taken as a Wyckoff accumulation level. And after the accumulation, what follows, you might already know from my breakdown videos, a markup, right? Accumulation is down and we expect a markup. Now it's doing so, right? But what I need to see again, like, let me be clear here. Continuous creation of demand zones. That's the first demand zone, which will prove that market is in a bullish order flow. So orders in buy direction, in long side. If you see demand zone got created, respected, it means that, okay, everything is looking good. The potential and probability of it to continue that way is high, so we can enter, right? So now with this down move, we get supply zone creation, but as you can see, that was our demand at the bottom. You see how price reacted from it aggressively? That's the beauty. That shows us that, okay, we are in the right direction. Trend is in our favor, right? By the way, the easiest way of it, how do I put it correctly for you? If you want to determine which direction trend is going, either bullish or bearish, the easiest way, you can use EMAs. If you don't know how to use the market structure, supply and demand, blah, 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 to understand the trend direction, you can use 20 EMA. And that's the red one here. If the price below 20 EMA, it's potentially bearish. If it's above, if it's potentially bullish. Easiest way. I'm not saying it's the best way, but it's easiest way in combination with other technical analysis, right? If you combine it with supply and demand, support resistance, Wyckoff, it's going to be beautiful, right? So that's one of my confirmations as well, right? So I see that we got reaction from demand zone, strong reaction from demand zone, which let the price go above 20 EMA, like above all the EMAs 10 and 20 here in this example, creating another demand. You can take 2 candles or 1 candle, it's all right. I'm going to take the entire zone. So what do we see here? We had 1 demand zone, boom, respected, positive reaction. We have another demand zone. If this demand zone gets respected again, that means that we can anticipate another breakout after the consolidation area here. So let's see what happens. Price is above 20 EMA, creating another demand zone, respecting it. As you can see here, demand got created. That did not get tested, but if we take the entire zone got tested, let's see what happens. Demand is fighting for it. Demand is fighting for it. demand actually held here. If I see no closure below it, it means that demand held it. But if I see that another demand zone got tested here, I'll take it as a fact. So we had demand 1 got tested, respected, demand 2 got tested, respected, and we have demand 3 got created. Let's see if it gets tested, respected as well. In reality, this is the moment you can actually enter the market, have such entry. If you're happy, this is low risk trade, to be honest, because we have 2 demand zones, all of them respected. We have newly created one, third one here. Probability of that demand is going to hold is high, so we can enter like this, right? But this is not how I entered. This is not how I entered. I did enter, I guess, after seeing breakout, after seeing this breakout from the entire structure, above the entire structure, and another demand zone got created here. I did refine it to this very last candle. I believe I did like this. So I waited for price to come here. So this trade is a day trade / scalp entry. So I was using multiple techniques to enter precisely with tight stop loss on this trade. So price came to our zone. Boom, boom, boom. Okay, at this moment, this alone is a confirmation candle for me. If you ask why, there's always answer for that, but yeah, I just don't want to keep all the details and mess with your brain. It can be overwhelming, but if you see such candle which took the low of the previous candle, closed above it with volume, it's a huge candle, like rejection candle. I'm not talking about any candle patterns here. Like the more you trade, you understand how the candles work, what happened, how this candle actually formed. So it traveled low, came back up, down, and closed here, right? Something like this. So it opened here, came down, up, closed here. Let me make it cleaner for you. This candle opened, right? Went down, somewhere in the price, did some action, came up, and closed here. So this is the story of, oopsie, this is the story of this candle, right? Of this candle. So if you go on lower time frame and see this is just exactly how what we trade. Let's say Wyckoff accumulation completed, blah blah blah, came to demand zone entry. That's how actually candle patterns work. You need to understand why these candle patterns work before you actually blindly use them. So I believe I went to 1 minute time frame just to understand what's happening and get precise entry on it. For me, on 1 minute time frame, it was important to get another confirmation. As I was watching closely 5 minute candle closure, I went on 1 minute to get cleaner look at price action. So for me, it was important. What was important for me here is to have at least one candle above 20 EMA. Easy. And that was this candle. So it means I could have gotten an entry even faster, even before what we had there. So such entry is also possible with tighter stop loss, even what we had. And okay, it's too high. And targeting this high is 1.25. It's not for me. 1 to 2 at least, or 1 to 2.5 is beautiful, right? So you roll. This is 1 minute. I'm observing the price action in 1 minute. So this candle, let's go candle by candle, right? This candle, bearish one, is made me a bit nervous because it's closing below 2 candles, previous candles, and below the 20 EMA. What will make me happy if the price comes close and closes above this bearish candle and fully dominates it? If that happens, beautiful. Really good, right? At this point, I knew that, okay, all right, we can move our stop loss to this low. I believe it was here. I'm showing you a different potential entry here. So we can manage it with stop loss moved here because reason. We had demand here, reaction from demand. We had another demand here, reaction from that demand. So there's no reason, if market wants to go higher, there's no reason for it to come back and retest the demand zone once again. There's no reason. If there's a demand, it will go at least reach and take these highs, at least. Okay, if not Trump or other one, Jeremy Powell speaking, that's not gonna happen. So price is reaching. Okay, that high got taken. Now it can reverse, do something because liquidity has been taken. And price is doing great. Stop loss can be moved to break even, removing our risk, like completely making the trade risk-free. Hovering around here, created another demand. I want you to understand the power of supply and demand here. Demand got created makes us even safer on this trade because this should hold, right? If it fails, that means we have supply zone create. And demand is getting respected, and that's your take profit hit. Easy as that. So simply knowing how supply demand works, you can understand the order flow in the market. With combination of Wyckoff and EMAs, you can use your tools. You can even not use any indicators. You are not dependent on indicators. Your best indicators are your eyes. But anyway, it helps you to see if you're not in the market for a long time. It's hard for your eyes to identify a few structures. You know, I can remove all the indicators and see what's happening in the market, like whether it's above or below 20 EMA. It's just helpful, you know. You look at the chart 2 seconds and know what's going on. It's for you or not, meeting your requirement setups or not, right? That's the trade we took, and we made $10,500 on this trade. Well, I modified it a bit by entering a little different, just to show you the example, but the idea behind these two trades I've taken are the same. So it's a bit different, slightly different from what I've taken. My entry was like at this candle close, exactly at this 5-minute candle close, this one. And stop loss, I believe, was somewhere here. Somewhere here. Let me check. Stop loss 39.3806. 39.3806. Somewhere here, right? Okay, somewhere here. That was my stop loss, and take profit is, I believe, here 235 equals my risk reward. So these trades are a little different, but this one makes us more profit because it's 2.52 hours, right? It looks smaller, but it makes more profit. But I prefer this one because scalp. This is super scalp. This is scalp / day trading. This one is much safer. Right? Both of them worked out pretty well. If the direction is right, which is the most important thing, as I always say, 70-75% of the success on your trade comes from the trend determination. The correct, if you find the correct direction of a trend, your 70%, your trade is successful. 70% success depends on it. Right? I messed up with the sentence, but yeah, you got what I said. Right. So it means that if the trend direction determined correctly and it's bullish, you can use supply demand, you can use support resistance, you can use Fibonacci, and it will work. For example, here we see an impulse, just showing you an example and how easy after correct trend determination. We use Fibonacci and we see like 618 here. It's little invisible here, but the golden one is 618. So this is the impulse. We use Fibonacci from low of the impulse to high of the impulse, and I don't know, combine it with support resistance zones. That was the area of, that was the resistance, broke above and came to retest, falls on our 618 Fibonacci. We enter, hold it to here, 1 to 3R in the correct direction of a trend. How easy it is. Somehow support resistance Fibonacci even works here. Why? Because the trend direction determined correctly. So that's actually all about this trade. Whatever happened afterwards, it's not our business, right? We wait for a setup with right discipline and always get involved when the time comes, like waiting with patience. It is what we do as a traders. Like, long story short, most of our time as traders is waiting like a sniper for a correct time, for a right time. It's not like, okay, I see setup, I see bullish candle, I enter. I see bearish candle, I enter. No, we wait. Most of the time we wait. And that comes from experience, guys. So yeah, as always, I always share trades I enter myself. I did enter that trade exactly here in my terminal, as you can see. Like that's the moment of entry and take profit hit. We took, like, as I said, 10,500. Yeah, we have commission, so it makes like 10,400 something on that trade. Everything has been shared on time, in real time with you guys. So with management, how I moved my stop loss, I believe this trade had no management at all because it was really close and straight to take profit. Did not give me any time to manage it properly. So it makes this trade extremely beautiful, and that for that reason I made a breakdown of it for you guys. $10,526 on a single trade in 50 minutes, guys. This is beautiful. If you guys want to learn and trade with me, as here in my private money lab, it's very simple actually. You go to my Telegram channel, a public one. You can see start here button, right? You just need to start here, message me personally. I'll give you all the instructions required for you to join the private channel. It's fully covered. Your place in the private channel is fully covered by my broker, with which I'm working over 5 years now. I believe it's 7 years already. So it's simple. You get access, trade with me live, and start building consistency, guys. That's for today's breakdown. And what else I had to say? Yeah. Enjoy your weekend. If you have any questions, you feel free to ask me, message me, guys. I'm always here and trying to be helpful as much as I can. I hope that the video of breakdowns, you like this concept and it's valuable for you. I'm trying to show you the experience I gained in 10 years. This is not easy. You're not going to get it elsewhere. Like on YouTube, nobody's going to break down anything for you for free, right? Like, have value, understand, ask questions if you have any troubles. Yeah, I'm here, guys. I'm here to support you. So that's all. Be patient, be disciplined, and once in the future it will pay off. I'm 100% sure about that. If you have any doubts about trading, don't. More setups like this will come in the future. They always do. We just need to be ready for it. Opportunities are always present somewhere there. All we need to do is to be ready to take the opportunity. So guys, I'll see you next time on next breakdown or Monday, I believe, if you're in the private channel. So take care.